From 11FS, this is Fintech Insider News, and I am your host, Benjamin Ensor, Director of Research and Strategy. Thank you so much for downloading this podcast. If you like what you hear, please recommend us to a friend. This week, we're talking about Ant International partnering with Yapily to launch Europe's first commercial variable recurring payment. Variable recurring payments are a little bit of a mouthful, but essentially what they do is they offer consumers more control over debit payments out of their account, enabling them to limit how much a particular biller might take away from them and have more visibility into it. Meanwhile, they offer merchants a lower cost way of processing payments. So win-win all round. Perhaps they'll become a bit more popular after Ant International started embracing them. Meanwhile, Airwallex has signed a multi-year deal with Formula 1 racing team McLaren. So we talked about the economics of whether it makes sense for fintech firms to sponsor big sports like Formula 1, and whether in fact there's a logic to firms like McLaren partnering with fintechs to reduce their own payments cost, and that perhaps that is really at the core of this deal. And would you be fooled by a deepfake of your CFO? One poor employee in Hong Kong made a $25 million blunder thanks to some sophisticated scammers. And we talked about the increasing sophistication of deepfakes and the growing difficulty of differentiating humans from robots. So we get into all of this and much more on today's show. Hello and welcome to episode 825 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. I'm joined this week on Fintech Insider News by three great guests who are here to help me break down the week's biggest news stories in fintech and financial services. Firstly, we are delighted to welcome back Valentina Kristensen, Director of Growth and Communications at OakNorth. Welcome back to the show. For our newer listeners, would you mind reintroducing yourself and what your role is?
Sure. Thanks very much and great to be back on the show. So I'm the Director of Growth and Communications at OakNorth. And if you're not familiar with OakNorth, we basically empower entrepreneurs of scaling businesses, so businesses with $1 million to $100 million turnover, with bespoke credit and personalized banking services.
Fantastic. Well, welcome back. And we're also delighted to be joined this week by Roland Selmer, who is Chief Product Officer at Yapily. It's great to have you here with us, Roland. Would you mind telling our listeners just a little bit about you and what you do at Yapily, please?
Sure. Thanks, Benjamin. I am the Chief Product Officer at Yapily, so look after the technology team, which consists of both product engineering. So what does Yapily do? We're an open banking infrastructure company that provide payment and data services through our APIs to a variety of customers through our integrations of over 2,000 and counting now, financial institutions. So basically the problem we solve is a problem of aggregation. So our customers only have to do a single integration, and then they get access to thousands of banks and financial institutions.
Fantastic. Well, welcome to the show. And it's great to have Rina Wulfing, Senior Policy Lead for North America at 1's. Good afternoon. Well, good evening, whatever. Good morning, even. Thank you for joining us. I'm sure our listeners have heard of 1's, but can you tell us a little bit about you and what you do, please?
Yes, thank you, Benjamin. I am an avid Fintech Insider listener, so super excited to be here. My name's Rina. I'm on the policy team at 1's. 1's is a cross-border payments company. Building the best way to move and manage the world's money. 16 million people and businesses use 1's, and we're able to save about 1.5 billion pounds every year of customer money. And I'm on the policy team, which means I work with different regulators and policymakers to improve cross-border payments for everybody.
Well, welcome to you all. It's quite an honor to be in the presence of three esteemed fintechs and esteemed people from those fintechs. So thank you so much for joining today. All right, well, let's jump into the news. So our first story this week was reported widely, but we picked this up from FF News, which is that Ant International and Yapily have launched Europe's first commercial variable recurring payments, VRPs, for e-commerce. So China's Ant Group is expanding its existing partnership with open banking platform Yapily to introduce Europe's first ever commercial variable recurring payments. VRPs will be rolled out for e-commerce via open banking across mobile payment platforms, starting first on the Asian food delivery platform Hungry Panda. UK users of Hungry Panda can already use the new features, which creates a simpler payment experience for customers and lower transaction costs for merchants. The collaboration marks the start of a wider rollout of open banking technology across the Ant Group businesses, which include Antom, a global merchant payment processing solution. So it's fantastic to have Roland here with us to help us unpack this story a little bit. Could you start by just explaining to some of our listeners, what is a variable recurring payment?
How long have we got?
2 minutes.
So as the name, first of all, thanks for inviting us on this podcast. It's been a super exciting week for us, and I think in industry as a whole, it's a culmination of a lot of hard work the last couple of months. To answer the question, I guess we have to go back to the original implementation of open banking. And if you think about what open banking, what the problem open banking solves really is kind of, in a nutshell, federated access to your bank accounts. And that's either, as I said in the beginning, through or for payments or data. So the mandated, what we call the mandated open banking APIs were essentially for exactly that payment initiation service and account information service. And what those allowed were access to payment rails via the existing online banking infrastructure. So using strong customer authentication, allowing customers, as I said, federated access to their bank account. What was missing, though, is sort of long-lived consents. And what I mean by consents is that each payment is allowed via consent from the customer through logging in through their strong customer authentication, online banking authentication mechanisms. And essentially what variable recurring payments provides now is this card on file type experience, which will allow a user to set up a long-lived consent, and it's variable and recurring in the nature that customers can now set limits. So they can set limits to how often these payments can be made. They can set limits on the amounts either per transaction or per month. So great flexibility for a payment rail and payment mechanism.
And is that how it's different from a direct debit? Because obviously the UK and many other countries have direct debits where you authorize a biller to take money from your account. Is the difference with a variable recurring payment that the customer has more control because, as you say, they can limit the amount and so on? Is that the crucial difference?
Yes, I think like the two main differences are around transparency and control, as you say. So probably the other two technologies or rails, let's say, that VRP often gets compared to is obviously direct debit and maybe some continuous payment authority consent. So from the transparency perspective, yes, you get to see all the mandates and the payment parameters upfront, and these are all visible in your banking app, whereas with direct debits, you'll have visibility of the mandate and maybe the last amount that was taken. And then from a control perspective, exactly, these consents are essentially federated tokens that can have expiration date, or they can have certain limits applied for them. And these are all readily available within the banking app. All those controls that I mentioned before in terms of like the parameters for maximum amount spent and number of times these can be done per day or per month, etc. That's all kind of user defined and controlled by the users.
And the story we picked up said that this offers lower transaction costs for merchants, and of course merchants are always very interested in lower transaction costs. How exactly does it lower the transaction costs? Why is that correct, that it is or can be cheaper for the merchants, and how so?
Yeah, certainly. So obviously, if we compare it to maybe like a card on file use case, then obviously like interchange fees and card fees the kind of the direct costs. There's obviously also indirect costs with cards associated with either fraud or chargebacks or things like that. So for the merchant, certainly there are great advantages. And then from a consumer perspective, it's really an amazing, it's kind of the holy grail of, I guess, open banking user experience, right? So really matching that kind of card on file, one-click checkout experience. And I guess from a consumer perspective, those savings can often be transferred via merchants to make a more compelling proposition for the end consumer. So on the whole, it's a fairly powerful proposition.
Valentina, I'd love to bring you in and get your take on this story, because obviously anybody who's been in the UK banking market has seen the sort of relatively slow, let's say, rollout of open banking and the challenges of getting sort of end customers sort of excited about things like this. Do you think partnerships like this are going to mean that consumers start understanding what a variable recurring payment is, or do we have a long journey? What are you experiencing at OakNorth?
I don't imagine we'll see a future where they will know what a variable recurring payment is if you were to ask them. I mean, according to data, only 11% of British consumers are active users of open banking. I'm sure if you were to ask, a number of people, they would say, I don't know. If that's what the data shows, then fine. It's about 1 in 10 consumers. But I'm sure if you were to ask people, the number could end up being potentially lower than that, because a lot of people might not really appreciate what open banking is. And it's been, in the UK since 2018. So, this is year 6, obviously, in the open banking journey. But I think they don't really need to know what it is. It's whether ultimately they have a better experience. And if they say my experience of, ordering, has, from Hungry Panda has been, really great. I wish everyone else did this. Then that's potentially something which they might find is something that they would, they'd want to do with other vendors. I suppose my question is, with this particular vendor, setting limits and things, is it just because it was a sort of a safe place to start? I would think of somewhere in terms of like where you might want to set limits and things might be, things like, I don't know, national lottery or something like that, where people might be more concerned that they might overspend. Maybe people feel like they'd overspend on a delivery platform like this, on takeaways, sure. So maybe that's something. And maybe, and I suppose again, also where you might want to have that degree of control and transparency is also in somewhere where there might be a higher likelihood of fraud. Again, I don't know how many people would expect someone to, the first thing they do if they stole it would be to go and make an order on food. Probably not. They'd probably try and do something else. So I think I guess my question was that sort of a safer place to start, choosing that vendor versus, going with someone else? What was there something specific about Hungry Panda that sort of appealed in the partnership here, I guess would be my question.
Yeah, maybe just start answering the last question first. With regards to limits and things like that, our research has just shown that consumers prefer choice. So anything that allows a more granular control seems to be, the obvious thing to do. From a Hungry Panda perspective, they've just been, really great partners working with Ant Group. They were just very much up for being, let's say, pioneers in the space. It really feels just like the tip of the iceberg from a deployment perspective, because if you look at going back to that kind of user experience, it really is about that. If we put aside the savings and let's say the merchant benefits from, let's say, fraud perspective, no chargebacks, etc., which again will probably be passed on to consumers in terms of discounts or what have you. They were just, as I said, up for being pioneers, adding a new payment rails to the checkout experience that kind of fit with their business. And yeah, it's just the start.
Rina, I'd love to bring you in. Wise has obviously built its business partly on the basis of cutting payments costs for consumers and businesses all around the world. Are you looking at things like variable recurring payments, and sort of looking to try and get that brought into other markets? Presumably Wise is constantly looking out for ways of cutting payments costs because that's sort of part of your raison d'etre. What do you think of this story?
Yeah, absolutely. I mean, Wise, as you mentioned, incredibly supportive of open banking and consumer rights to their own data, allowing consumers to choose, as Roland mentioned. And that's whether it's market-driven, like we're speaking about here, or driven by governments. The UK, for example, as you all know, has an open banking regime that I do think increases things like transparency and lowers costs. But in addition to needing consistent and reliable APIs there, I think the frequency and availability of data collection is also equally important. And this kind of gets into where transparency does save consumers money on the open banking side. So like foreign exchange for information, for example, provides key comparison data on fees, helps consumers comparison shop, but it should be also stamped with an accurate date and time. Otherwise, like Wise has observed in the UK, providers can choose to show older, more favorable exchange rates, for example, and hide fees that way.
So Roland, this is exciting news. What comes next? Is this you're looking for sort of more merchants, more partnerships? I think, correct me if I'm wrong, variable recurring payments only truly exist in the UK at this point. So you can't quite take this international yet. What's sort of next on your roadmap if that's not secret information that you can't share?
It's just us on this podcast, right? So I can share with you guys. Yes, I think we just want to make sure that obviously this is a success with our first merchant. Early indications show that it is a great success. So yes, so the plan is just to expand the number of merchants, the number of use cases. I think for maybe your listeners, open banking unfortunately is acronym word salad. So we should probably explain some of the acronyms we're using. What we're talking about here is commercial VRP, right? And that's why it's kind of a first for the industry. From our perspective, VRP has existed already as we call it, like sweeping VRP, which is kind of me to me use case. And this is the first, let's say, business to me use case. So that's kind of the exciting part. So I think bringing the like kind of one-click checkout experience to consumers using secure banking rails is super exciting. So expanding merchants, and as you probably know, in Europe there's a equivalent dynamic recurring payments that's also going to be pushed this year via faster payments equivalent SEPA Instant. So we do see a lot of opportunity and growth. Val's correct. It has been a long time coming. Sometimes it feels like it's taken longer than it should have, but it really does feel like we're at some kind of inflection point where we're starting to get kind of merchant adoption and seeing some good traction.
Well, fantastic. Congratulations to you and your team on all the hard work in bringing this innovation to market. And we wish you every success. So let's watch this space. And I hope we'll have you back on the podcast very soon.
Thank you.
With another exciting innovation. All right, let's move on to our next story, which is that research from Wise has highlighted the widespread consequences of junk fees on American consumers. So recent research from Wise reveals that many Americans believe junk fees are contributing to poor financial well-being. Respondents who encountered junk fees in financial transactions cited overdraft fees, missed bill payments, and home buying costs as the most financially detrimental. The research also found that Americans are most affected by a junk or a hidden fee when using financial services such as credit cards. Additionally, 74% of the respondents said junk fees are an important issue when determining a candidate to support or vote for. The research was conducted in collaboration with Morning Consult and surveyed 2,000 Americans. Rina, thank you so much for joining us to talk about this. Perhaps you can give us just a little bit more context. Who was surveyed? Was it just 2,000 sort of representative Americans, or did you focus on particular groups? Because the proportion of people who are affected sounds high. Sounds like most people are getting hit by these kind of junk or nuisance fees.
Yeah, absolutely. So we surveyed 2,000 Americans around the country. And this wasn't specific to a particular demographic because we did want to be representative across the board. And the idea here was the Biden administration, now Canada, additional countries are looking more closely at junk fees and where they need to address this from a government perspective. And we were looking around, didn't necessarily find any clear research as to the impact of, one, how these fees impact Americans, but also separately how they feel about them, right? So our idea with commissioning this research with Morning Consult was a better understanding of how transparency would maybe more positively impact the Americans we were speaking to, right? And we did find, we were a bit surprised actually by the research, in particular that Americans, for example, cited that they were interested in going to a different provider after being impacted by a junk fee. International payments came up, quite a bit. We were interested in that, of course, as a cross-border payments provider. And this is actually, our founding story is around transparency, right? When our founder, Christo, lost a ton of money in a transaction in hidden fees, transparency became, part of our DNA. So looking more closely, in particular, at international payments and how exchange rate markups impact not just Americans, but globally as junk fee was of particular interest to us.
How do you define a junk fee? I mean, I think I know what a junk fee is. A junk fee is a sort of a fee that feels unfair. It's a sort of slightly punitive fee because I haven't done something, like an overdraft. I've gone overdrawn, I didn't realize, and I get charged a fee for it, and that fee can seem exorbitant to me because I'm like, well, I just only briefly went over or whatever. How did you define a sort of junk fee or a nuisance fee?
Sure. I mean, we were just basing this is off of how the Biden administration had been looking at this. And you said it perfectly, either a hidden fee or a fee that feels unfair. We more wanted to see what Americans thought of those fees.
And just another quick clarification. What proportion of Americans actually said they had them? Because we talked about what types of fees people were coming through, but I don't think we picked up on what proportion of Americans said they'd actually were suffering from these fees.
Sure. So half of Americans, or over half, noted that they're familiar with the term junk fee without it being provided. And then with the definition being shared, this raised to 70% of Americans who acknowledge that, these are fees that do exist and impact them. Further, over half reported to have a negative impact to their emotional well-being from junk fees. Further, over half said junk fees are negatively impacting their own financial situations.
Valentina, I'm going to bring you in here. I sometimes think that the dirty secret of the retail financial services industry is that an awful lot of money is made from taking advantage of people not fully understanding things and taking advantage of people doing things like missing bill payments and so on. Is that an unfair characterization? Do you think the industry's got better at sort of making money in transparent and legitimate ways, or do you think there still is, around the world, a lot of retail financial services companies sort of taking advantage of consumers not seeing things coming and sort of penalizing them for things that are really just a bit unfair?
Yeah, I mean, look, I would think for sure there's lots of companies around the world that are making lots of money from that, but equally I know there's lots of fintechs that are being transparent. Wise, it's a great example, and it's making money. It's profitable business doing so. So I think you absolutely can, you absolutely can make money and be a successful business being transparent and upfront about fees. You talked about, the Biden administration, Rina, obviously, they had classified these junk fees in sort of 4 categories. So mandatory fees, they obscure the full price charged by a seller. And they're sort of, like, let's say, you're buying like a concert ticket, and then you kind of get a fee at the end, which is like a transaction charge or like a servicing fee or something. And there's that. Then you've got surprise fees, so fees that consumers don't expect, such as the family seating fees charged by airlines, or some airlines. Predatory fees, so they target consumers who are economically vulnerable or locked into a service, such as excessive bank overdraft fees. And then fraudulent fees that represent an outright misrepresentation by a seller, such as a no-fee bank account that makes hidden charges, as part of its practice. So if you think about junk fees in those sort of 4 categories, then I would say, I would hope there's not that many fintechs that are or providers out there that are making it from sort of fraudulent fees or predatory fees. But again, I know that there will be, something could be perceived as predatory. It might be a service that specifically targets those with, a poorer credit score, for example. Now, they might have to charge a particularly high interest because, this is just the model, it's the risk that they're taking. Would that be considered a predatory fee? I mean, it's higher than they would be charging someone with a better credit score, but then what's the alternative for that individual? Then they don't have an option, right? Because if they go to those ones where other consumers go, they just simply won't be served. So, I guess some of those providers might argue that's not predatory. It's just what we have to do from a risk perspective when we're served, because we're trying to help this demographic who otherwise would not be served by anybody else. Surprise fees, I think we all see those, but I would say they're probably less prevalent in financial services, to be honest. You're probably more likely to see them in things like, when you're buying tickets for something and then it happens to kind of come up as a bit of a surprise. The mandatory fees, yeah, I think you definitely still see this in some parts of financial services, and it could be that you're going to have to, I don't know, pay to have something sent to you, right? Like you have to, most, like, I don't know, if you lose your card, right, you might have to pay a fee to like have the new card sent to you. I don't know if that's really that unfair, to be honest. I mean, they've got a cost, an expense from the financial service provider's perspective to have to do that, but it might be a cost that you hadn't factored in to part of your services, but it's kind of down to, a mistake that I guess you've made in terms of losing your card, or perhaps if your card's stolen and they need to send you a new card and then they say you have to pay for a new card, to be sent to you, then I guess maybe a consumer might see that as a little bit unfair, but you are talking probably a couple of pounds at the end of the day, so it won't exactly break the bank. Yeah, I mean, I don't know. I don't know if this is something that lots of consumers are really are really being impacted by. But, I think what it really showed me was that there seems to be a lot of things that are quite backwards in the US with some of this stuff compared to, the UK. I think about following that announcement from the Biden administration. They sort of said, we want to, the CFPB last year proposed a rule that if finalized, would require financial companies to allow customers to safely, securely, and reliably send their banking transaction data to other companies and banks. This would make it easier for people to break up with their bank and switch to a different bank, which might have a better offering for them. I'm like, really? I mean, we've had the current account switching service in the UK for how many years now? Over a decade, I think. I believe it's been since 2008. So, that just seems crazy to me that there could be, if this is done, then it'll make it easier for customers to switch bank accounts. So some of it, I sort of, when I was reading it, was just very surprised to see how backwards some of the, the current offering is for consumers in the US. So if this is going to help to bring some of those things more into the 2024 world, then I think that's a good outcome.
Well, thank you. Roland, what did you think of this?
I mean, I'm 100% behind Rina, and I hope she comes and does the same analysis here in the UK. I think it's quite an emotive subject, right? Like, especially in times of, let's say, economic turmoil. I think all of us as consumers have received some kind of bill and seen exactly the kind of things Val was talking about: a processing fee, a handling fee, opening the file fee, and then kind of humphed and thought, that's a bit cheeky. And also suspect that this is probably, the business model of certain institutions or companies. While not illegal, going back to the transparency point, is certainly not it is not ideal from a consumer perspective. So I think, definitely resonates. And better transparency. To Val's point, actually, if you had a service which said, "Hey, these are all the, let's say, junk fees you've paid in the last month. Would you like to switch, institutions or providers?" I think you'd have probably like a 98% uptake.
Rina, you and your team have highlighted a really important issue here. What is the answer? I mean, we've already got a product solution already, which is fantastic. But is this just a regulatory thing? What can companies do? What do you and your team see as sort of part of the answer here?
Well, I think to Roland's point, we did find in this research that consumers were willing to switch accounts. If they had experienced a junk fee, or if they know that they had experienced a hidden fee, they would be interested in comparison shopping, right? I think the hugest takeaway is, increased transparency in the market could lead to reduced costs and reduced, junk fees if consumers are interested in moving providers in response. So that was, very encouraging. And then on the side, of course, I'd be remiss to not mention international payments in particular, and an exchange rate markups were cited as something impacting consumers. And that's something that, for example, in the US, we realized that $5.8 billion was charged to Americans in hidden fees in 2023 just through an exchange rate markup. And that's an area where very clear action from the CFPB and the Biden administration, I think, would be very welcome. But also, consumers do have an opportunity here to become better educated on what fees are out there, right? And that there are options, and in particular financial technology options, that allow some of the avoiding of these fees. The point isn't necessarily that all of these fees are problematic, but they should be incredibly clear and upfront, right? No more hidden fees in this area.
You mentioned the Biden administration a few times as you've been talking, and of course this year is an election year, and the Biden administration has a year, this year to run, and potentially longer beyond that. Do you think an incoming Republican administration would be likely to sort of continue down the same path of consumer protection, or do you think a change in the presidency might affect the course of sort of an American administration's thinking on this kind of issue?
So I do think there's been a bit of a partisan response to the junk fees branding, right? But the hope is that there would be acknowledgement from whatever administration that some of these fees, in particular hiding fees, does prevent any natural market competition, right? No apples to apples comparisons. That's bad for everyone, right? There should be some sort of disclosure requirements around these fees, I think. And my hope would be that any administration would see that.
I am liking Roland's product solution of identifying the fees that individual you can see, an aggregated business able to do that. That would be pretty powerful if we started being told and pointed out how many fees we'd each individually been charged. So two hopes here. One hope is regulatory action, and the second hope is Roland's new product. All right. Well, fantastic. I think that's a really excellent piece of research. Obviously, I am director of research at 11FS, so I'm sort of geeking out a bit on this. I'm loving this. So well done. Great stuff. Shining a light where a light needed to be shone. So thank you. Okay. Well, we're just going to take a quick pause here, and we will be back very shortly. Welcome back. Before we get into the second half of the news, a quick note to check out our most recent Fintech Insider Insights show. In this episode, we're celebrating Black History Month in the United States by discussing civil inequality in the banking system, and we're trying to shine a light on some of the people and companies trying to do something about it. So my colleague, Strategy Director Kate Moody, is joined by Rodney Williams, founder of Solo Funds, Asya Bradley, a founder and angel investor, and Jamilia Greer, Chief Executive of ByteBow. They chat about why non-white communities are being underserved by financial services and how fintech can be harnessed for good to drive meaningful change. So please have a listen to that. It's in our podcast feed. It should be the one just below this. Okay, let's get back into the news. So the next story was reported in various places and plastered all over LinkedIn. We picked it up from the Fintech Times, which is that Airwallex has raced into a partnership with Formula One team McLaren. And you can see the fun that the sub-editors had with that headline. So Airwallex, global payments company, has agreed a multi-year deal with the McLaren Formula One team. The deal means that Airwallex will support McLaren's global financial operations with its treasury management, cross-border payments, and settlements product suite. By using its payment rails, McLaren can unlock more multi-currency payment options and reduce its SWIFT fees. Airwallex will also support the growth of McLaren's digital partner merchandise platform. In return, racing fans are likely to see Airwallex's logo whiz by on the side of McLaren cars at future Grand Prix events. So I saw this and I was thinking, the last company, the last fintech I remember doing a lot of high-profile sports sponsorship was FTX, and we know how that ended. Now, obviously, I'm not suggesting for a moment that there is anything bad going on at Airwallex, but Big sports and fintech, do they go together? Val, I think you've probably got a pretty strong marketing head on your shoulders. So let's come to you first.
So look, I'd sort of say full disclosure, huge Formula One fan, and watch, Drive to Survive. I'm looking forward to, season 6 dropping in about 2 weeks' time. So that's very exciting on Netflix. I support Ferrari, not McLaren. So also very excited to see the news last week about Hamilton joining Ferrari in 2025 from the 2025 season. That's very exciting. Look, on your point around fintechs and sports sponsorship, like, let's just be clear, in Formula One, there's loads of fintechs, right? Darktrace has been a McLaren sponsor for Formula One sponsor for some time. They've been on the livery for several years. MoneyGram, obviously in 2022, they became the title sponsor for Haas, the US Formula One team. In other sports, crypto companies take up so much of the ad space in the Super Bowl that it's been nicknamed the Crypto Bowl. On this side of the pond, in the UK, Starling was the sort of official partner for the UEFA Women's Euros in 2022. So I do think there's definitely a place for fintechs and sports sponsorship, and obviously it can be really impactful in terms of growing your brand presence. McLaren is a user of Airwallex's product. It seems like that was announced as part of the partnership. I don't know if they began using it as a result of this, or they were always partners and they just sort of said, actually, why don't we increase the partnership? Or if there was some kind of sweetener to the deal, right, where perhaps they say, look, give it to us for a better price or a discounted price, and then you can get some branding benefit. Who knows? I have no idea if that's the way those things work at all. But I think I'd be surprised if there wasn't some negotiation around that. Look, I think Airwallex, it's really expensive to do this. Formula One is one of the most expensive sports in the world, so it's super expensive to be on the livery of any Formula One team. And so, great if Airwallex has the budget for that kind of thing. I think they said in 2022 they would become cash flow positive in 2023. I don't know if that happened. I haven't seen anything that confirms that. They're not profitable as a business, so you'd have to just make sure you'll be able to justify to your investors that this is obviously a good investment to make, because it's not coming out of your own. The profit, it's not coming out of profit that you're making as a business. It's coming out of potentially some of the funding that you've received from investors. So I guess they'll have to sort of show the return on investment over time, and then it could very much pave the way for other fintechs to see this as an interesting route to take in terms of increasing their brand exposure.
Yeah, they didn't disclose the terms of the deal, so our conversation is necessarily a little bit speculative. Rina, I'd love to bring you in. So McLaren obviously to some extent operates worldwide, right? They sell very expensive motor vehicles, as I'm sure you know, but they're also cost running a Formula One team, which means flying a whole team around the world to various different countries and so on. What kind of benefits might they be able to squeeze out of reducing their payments costs, right? Because if Val's right, and this is not just Airwallex paying, but actually it's a kind of discount on Airwallex services, what kind of benefits might a relatively big company like McLaren get from partnering with Airwallex to try and drive down its cross-border payments costs?
Absolutely. No, it's interesting to look at their car and all of the different logos on there. It's clear that they're very strategic about who they've signed, right? The partnership with Google, with technology and infrastructure needs, Darktrace, as Val mentioned, on the back fin, and then Hilton, of course, the hospitality that you need to travel a large team, even an NFT offering. It is a pretty logo heavy car. So in terms of strategy around how they can bring these costs down, that does make a ton of sense given their current model.
So do you think this may be as much about McLaren, getting better deals on the services it needs to run its business than actually the sponsorships?
I do want to, shout out to their marketing team. They're clearly thinking through what it looks like to move a team across borders, as you mentioned.
Roland, what do you think? I don't know whether you're a huge Formula One fan or not, but what did you think of this?
I certainly do enjoy Formula One. Like Phil, also Drive to Survive fan. I think if you look at how Formula One over the last couple of years has really evolved into more of a, let's say, show than a, let's say, pure geek sport before. I think this makes sense. As you said, McLaren's an international company. They have to do a lot of kind of cross-border payments. Besides them, obviously, should have been using Wise for their cross-border payments and international transfers. I'll talk about that later. No disrespect to Airwallex. They're a great company, provide some great APIs. I think it makes 100% sense. I mean, if you want to be a grumpy old man like myself, you could argue, well, B2B company, advertising in like more of a consumer space and who the real decision makers are. You can maybe make an argument about that. But, I suspect there are many, let's say, CTOs and CPOs watching Formula One as well and thinking, this maybe is a good idea for my company as well. So, yeah, makes sense.
Yeah, I was gonna ask that question because that was exactly what I was thinking. Is does it make sense for B2B companies to sponsor certain sports and so on, because you're going to reach far fewer of them? But then, as you say, people like CTOs, they like sport too, right?
Yeah, exactly. I've had some legendary arguments with chief marketing officers who've kind of been against that, and we are all consumers, which is at different levels. So the things that we see influence our decision making on a daily basis, and depending what you're doing, if you're in that space and you see a logo, a B2B logo on a very fast, nice, shiny car, I'm sure there's some Freudian science behind this is a good idea.
So Val, given your enthusiasm for Formula One and Ferrari in particular, there's clearly an OakNorth Ferrari deal coming at some point down the line. But how else do you think about marketing for OakNorth? I mean, when you're trying to reach sort of B2B audiences, do you think about sport as a way of reaching your audience? How are you trying to reach out to the audience you're trying to reach out? Is sport part of that?
So look, I mean, we do not have a huge brand at OakNorth. Yeah. We target a very specific niche of customer of business. So we're not trying to go after sort of the 99% of all businesses that are called an SME. We're targeting those very specific businesses that are making between $1 million to $100 million turnover. So that's several thousand businesses, and therefore you don't want to kind of go with perhaps a big, very expensive above the line type of campaign, because you might risk then bringing in lots of businesses that you just can't serve, because that's just not what we're set up to do. In fact, we didn't even hire a marketing director until October 2021. So before October 2021, as a business, for those years previously, we just had a PR and word of mouth, which was and customer referrals. That was what drove the growth of the business. We've now obviously had a marketing team for a couple of years, and they're fantastic. And in terms of what we do as a business, it's a combination of things. A lot of it is really built around developing the relationships with existing customers and with the sort of key business influencers around them, whether that's accountants, corporate advisors, and that could be, might be sponsoring events, it might be hosting a number of events, it might be other sort of thought leadership type of activity. In terms of sort of big, expensive, above the line type of activity, it's not something that we obviously get approached for lots of different things. I wouldn't say it's something that we've seen would be, at least in this stage in our journey, very impactful, or where we would be able to get the return on investment. I think that's the other thing, right? With these kinds of things, it's very difficult to determine in a tangible way what the impact's been. You almost certainly, I'm sure, Airwallex would have seen a huge spike in website traffic, on the day of the announcement and in the days following the announcement. And I'm sure once, the season gets started and again, they're appearing on telly every other weekend, then again, I'm sure they'll see spikes in their web traffic. Whether that leads or converts to sales in the long term remains to be seen, right? And again, fintechs have been sponsoring for some time. Darktrace, as I said, has been sponsoring for a few years. Now that might be, normally you kind of commit to a multi-year agreement. So I suppose if they renew when the time comes, then that's a pretty clear indication that they're seeing value from that partnership, even if it's, difficult to pinpoint in a tangible way. It's the same with tube ads. I remember a few years ago when Monzo was doing a big campaign and they had their tube ads all over, and I asked the marketing director at the time, have you guys seen a big impact? And he said, look, I mean, I wouldn't say we've actually seen a huge impact in terms of the number of new customers, but what we have seen is a huge bump in terms of employee engagement and people sort of really proud to be working for the company because their family and their friends, they're like, oh yeah, I saw the tube ads. And, now, sure, I don't, again, that's tube advertising can be a cost-effective way. It just sort of depends on the type of customer you're targeting. It can be a cost-effective way to get your brand out there. But as I say, I'm all about measuring impact and being able to prove that there's a return on every dollar being spent. And I think with a lot of these things, it's pretty hard to do that.
Agreed. That's very sensible advice. Rina, I'm going to throw the last question to you. So given the international nature of Formula One, it's in lots of countries around the world. It's people travel to all of those things. Is there a colleague of yours at Wise headquarters who's sort of sitting there thinking, I wish we had our logo going round on some very fast cars? Do you think there's somebody at Wise thinking, we've missed a trick there?
Besides me, no, I don't think so. Right? Our marketing team is incredibly strategic and thoughtful about these things. And to both Val and Roland's points, it's incredibly expensive to advertise on a McLaren vehicle, but also separately, we still attract 2/3 of our business through word of mouth because our product is great. So I think that's been the most effective use of our time and resources, has been making sure that we have the best possible product and that people keep talking about it. But yeah, thanks.
Love it. Okay, well, let's move on to the last big story, which is that Australian payments firm Fat Zebra is buying open banking outfit Adatree. Fat Zebra, which is an Australian payments infrastructure firm, has acquired the open banking technology platform Adatree for an undisclosed fee. Adatree was founded in 2019 and now has an open banking platform covering more than 99% of the Australian household banking market. Fat Zebra says the acquisition puts it in a position to own the smart payment action initiation that will be powered by incoming regulations. Australia's open banking regime came into effect in 2019 and is based on Australia's consumer data right legislation. Only firms accredited by the Australian Competition and Consumer Commission, the ACCC, are mandated to provide open banking services. Roland, I think it makes sense to come to you. Apart from Fat Zebra's fantastic brand name, do you think is this an interesting deal? Had you sort of looked at the Australian market in your journey?
Not directly, but you beat me to the punch on the Fat Zebra branding. I think we need to speak to their marketing agency. It's a phenomenal brand name. I think there's two elements to this. One, I think in open banking, at least from let's say connectivity infrastructure play, we'll continue to see some, let's say, consolidation in the market or acquisitions. We've seen a fair bit of that already with existing players and incumbents. So that consolidation will continue. But I guess what the advantage, let's say, for Fat Zebra is the vertical integration that's allowed by owning the actual infrastructure that they're operating on. So turns out infrastructure is quite difficult. So you can either build it yourself or utilize a company like ourselves or the acquisition that Fat Zebra made, and then really own the end-to-end experience. So I think from that perspective, kind of makes sense for them.
Yeah, Val, I'm sort of looking at this and thinking this is sort of part of the sort of ongoing consolidation of fintechs, as some good fintech businesses that just hadn't found a path to profit yet, sort of maybe coming towards the end of their runway and just looking for partners that can maybe take that business, take that tech platform forward. So I'm sort of looking at this and thinking this is a consolidation because some of the sort of excessive valuations have dropped out of fintech, and so some good businesses are running out of runway and getting acquired. Do you think I'm right in sort of looking at it that way, or do you think there's more to this?
I mean, I definitely think there's more consolidation. I don't know if that's if it's because Fat Zebra had a poor Adatree have an inflated valuation. I mean, Adatree had raised, a couple of million from 4 rounds, according to CB Insight. So it's not like, I mean, if they had an inflated valuation, it might have been like 10 million or something. I don't imagine, having raised a couple million, it wouldn't have been huge.
Not huge.
Fat Zebra, meanwhile, is valued at about, 250 million, so Australian dollars. So again, we're not talking about the sorts of multi-billion-dollar valuations that you see, here in the UK and in the US. I do think there is going to be some more consolidation, and it's probably, in part at the end of the day, it's a fairly small market, right? And it's also a market that's kind of, it's very on its own, right? It's not a time zone that lends itself necessarily well to, doing lots of business with Europe or with the US. And so, there's potentially a bit of a like strength in numbers. And if we unite, we'll create a stronger business that could potentially have more, traction and potential in terms of expansion. Yeah, I mean, I think, this is obviously, again, it's an open banking play. Open banking's been in Australia since 2019, so 1 year less than in the UK. And I saw some research from an Australian fintech that said about 55% of Australians have never heard of open banking, and only 18% have what they feel is at least a basic understanding of the concept of open banking. So again, I think there's a lot of work to be done in terms of educating the consumer and getting them to understand what the potential benefits would be. And as I say, I think it's probably just we're probably going to be a stronger business if we are united versus we're running out of runway and so you can buy us if you want kind of play.
Yeah, I think you're right. The journey of open banking in Australia has been similar to what we've seen in the UK and indeed elsewhere in Europe. Rina, Americans are, although you don't use the term open banking in the same way, the sort of concept of sort of aggregating and seeing all of your accounts in a single place is perhaps much better understood because of so many firms, like going back decades, like Yodlee, that have been sort of aggregating finances. Do Americans have a sort of clearer understanding of the potential to just sort of pull all of your money together?
The market-driven approach that the US has taken to open banking, you're right. Maybe it means that it's a bit more visible for individual consumers. I'll have friends that know I work for a fintech text me and say, hey, Plaid came up on my transaction today. What does that mean, right? So maybe it's more in our face. But on the other hand, I do think there's a lot of gains to be made if we were to follow the path of the UK or Australia and putting forward an open banking regime, right? And that's what the CFPB is working on and put out a final rule in December on. Very, very encouraged by at least the first steps going in that direction. And the hope maybe would be that we could learn from the developments in other places that have done this on the federal side.
What about the Australia's consumer data right? I don't know, Rina or Roland, whether either of you got a strong view on this, but isn't that a sort of clearer way of articulating that consumers should be able to sort of own their own data? In Europe we have this kind of slightly convoluted, general data protection regulation, and nobody really knows quite what it is. Whereas a consumer data right seems like better branding, at least for the regulation. How maybe Rina first and then Roland, how important is that kind of branding to getting the message across to customers about what their rights are?
Oh, absolutely. I think if you were to ask someone whether they support open banking versus do you support your rights to your own data, that would, be a way more effective messaging. And I think something that has worked really well in other jurisdictions and the United States. And I think this is why this is one of the only issue that brings together both sides of the aisle in the US is support for the CFPB, which is contentious in existence by itself, moving forward on an open banking rule. The support from both sides of the aisle, that was huge, right? And I think to your point, it's a lot about the branding around consumer rights to your own data. That's spot on.
100% agree with Rina. I think the world is definitely, even if you look at Apple's strategy about ownership of data, privacy, the whole concept of open banking being, let's say, the democratization of your own data and your own finances, I think is a very powerful proposition for for consumers. Maybe on kind of Val's point, some of the stats that she was quoting, I think a lot of people, obviously, open banking as a brand is probably not the strongest in the world, but if we talk about things like pay by bank or one-click checkout and stuff like that, people, okay, yeah, I've done that before. The stats will probably be higher. So I think, real adoption is probably, let's say, far higher than just the kind of pure, do you know what open banking is? And one of the, let's say, data points in the UK is, a lot of people pay their tax with the HMRC using open banking. So, I think adoption is a lot higher than maybe kind of the face value.
So it's about getting the right terms and cutting through the industry jargon so that customers really understand the benefits that fintech is bringing to them.
Exactly. Yeah.
Okay. In that case, let's move on to Big Click Energy, which is a very quick look at one more story that we don't have time to discuss in any detail, which is that HSBC in the UK has installed the first of 10 cash pods in towns with no bank branches. HSBC has installed its first cash pod in the British town of Nailsea to improve access to cash following the closure of all the bank branches in the area. These pods allow all customers to withdraw cash and check their balances, much like an ATM. But HSBC customers can also deposit cash, activate their cards, and make payments linked to their HSBC accounts. This is going to be the first of 10 cash pods expected to open across the country this year. Ollie O'Donoghue, Managing Director of HSBC's UK branch network, said, "We fully understand the community's need for access to cash. This marks the start of a new initiative for HSBC UK as part of our strong focus on maintaining and improving our local presence alongside digital and remote banking." So this is interesting news because in the UK, as in many other markets, the steady adoption of digital banking does risk leaving some people behind because bank branches become increasingly uneconomic. It's harder and harder to sustain the cost of employees there and so on, resulting in many banks closing their branches. And yet that risks leaving out many people, particularly older people who still wish to use cash, or people who have other good reasons for using cash, and of course all the good old tax dodgers out there as well. So having some kind of way of people being able to get cash is crucial, and it's become quite a big political issue. I mean, not a huge political issue, but in banking terms, a bit of a big political issue in the British market. So great to see HSBC looking for solutions. I think we need to see industry-wide solutions. I don't think it's viable for individual banks to try and solve this on their own. I think we need industry-wide solutions. But well done to HSBC for trying to start to fix the problem. Okay, well, let's move to the and finally section of the show, a look at something a little bit more offbeat from the news this week. This was reported on CNN. A finance worker in Hong Kong has given $25 million to fraudsters after a call with a deepfaked chief financial officer. According to the Hong Kong police, an employee at a multinational financial firm, we don't know who yet, was caught out by scammers using deepfake technology. The unwitting member of staff thought they were attending a conference call with several members of staff, but the meeting was a sham and they were all deepfakes. They posed as the company's CFO and convinced the unwitting member of staff to send them $25 million. An earlier email requesting a transfer had raised his suspicion, but all doubt was alleviated by the fake video call. The scam was only identified after the employee checked with head office. 6 arrests have since been made in connection with the scams. So, the question the producers have written here is, have you ever been duped by a deepfake? But I'm tempted to rephrase it as, have you been duped by a deepfake yet? Val, have you had any encounters with deepfakes?
Fortunately, no. I guess the closest I've had to some sort of fraudulent activity was that I got a provisional driving license, and I believe that that was copied, en route to, from it being printed to it coming to me. And then as a result, I ended up getting, there were, about 24 applications for various credit cards in my name. I fortunately knew that was happening because I pay for both Experian and Equifax. So I started to see that it was happening pretty much immediately. It's got the notifications on my phone, and alerted the various stakeholders that I needed to. But yeah, it was like, I mean, it's something that's incredibly prevalent, and something that happens to lots of people. And I was just lucky that I had those two things in place. So I was able to spot it before it had any impact on my credit score or any money had actually been taken. So no experience with a deepfake, thankfully, but I have had experience with with fraud in recent years.
Rina, I just got deep sympathy for this poor employee, because I can just sort of see how that could happen. You think it's your boss. What did you think?
Oh my goodness. I mean, in my previous role, I worked for a US member of Congress on the House Intelligence Committee. And this was back when the State Department was first raising alarms around deepfakes years ago, when this was first starting to materialize. And a lot of this was education around first the differences between deepfakes and other fraudulent activity, but then also separately suggestions on how to spot it. And I was so proud of my ability to do this and of this background. And just the other day sent a politician video of something funny that I thought was real and was a deepfake. So, didn't learn enough, apparently.
But they're getting so good, aren't they?
They are so good. Yes. But I so feel for this employee, because you can do every training in the world, but when you're actually in that situation, with your boss's boss telling you to send money, what a difficult situation.
Yeah, we're all kind of used to, listening to the boss. I mean, is the lesson of this story, ignore the boss. Roland, I don't know, did you see that? There was an amazing thing where Vladimir Putin did a sort of dial-in, a phone-in in Moscow. And one of the phone-ins was this deep fake of Putin. And he had his head down, and this voice starts asking him a question. He looks up and sees himself. I don't know if you saw that. It was amazing.
Yeah, and this is all kind of fun and games for us all until it happens to us.
Exactly.
Luckily, it hasn't. I think this problem is only going to get, let's say, worse. Generative AI. We've all played around with ChatGPT. We've all seen kind of deepfake videos online. I think where it's extremely dangerous is generative AI used in, let's say, phishing attacks. So. These attacks can now happen at scale without having humans on the other side. And you could have like a really decent conversation with an AI agent now, either through voice or via text. So I think that's the bigger threat. If they can do it at scale and they only have, let's say, a 1% success rate, you're still talking about billions of dollars in fraud. So one to look out for. I think the antidote to deepfakes in AI is, fortunately or unfortunately, AI itself. So,
because the thing is, the banking industry has really relied on video for the past few years to sort of authenticate people using video to show liveness tests and so on, and deepfakes just destroy that. If there's enough video footage, in fact, not very much video footage from any of us around, it starts to become possible for someone to assemble a deepfake of us.
Yeah, I mean, it's kind of possible now. We all remember the captures. Captures are still used at the moment to detect bots. Captures got broken a long time ago for logins with generative AI. So I think this kind of thing is only going to increase exponentially.
Do we get to the point where we can't trust that people are who they say they are? I mean,
I think you have other things, right? You have like two-factor authentication. You can. There's accessing, your phone and accounts using Face ID and fingerprints. So there's, fingerprint recognition. So there's a few different things which, sure, when you open an account, they sometimes ask you to send a video. So the person might be able to open the account, but then, a card's going to be sent to, that person's address. So that was another thing, right? This person hadn't really thought through the process, because all the cards that, obviously not a brainiac on the whole fraud front, as they often aren't. And, all this stuff being sent to my house. Great. So what were you planning? Were you thinking you could intercept the post as well and manage to break into my building and, get a hold of those cards. Some of the stuff is not necessarily always thought through. So they might be able to potentially open an account or apply for an account with a deepfake video, potentially, but then kind of what would be the next step from there? And I'm sure one day someone will figure that out. Clearly, someone managed to convince a number of people to transfer 25 million. So, again, these things are becoming more sophisticated, but yeah, I'm sure the technologies continue to evolve, and we'll figure out ways to keep consumers protected for the most part. But there is a degree of skepticism that I guess consumers have to always be mindful of, in the same way that they might get a fraudulent, a phishing or a vishing call or email, and it's up to them to be vigilant and to kind of think twice before they act on those instructions.
Last thought to you, Rina. Do you agree with Val's optimism that there probably are ways we can control this problem, or is the future sort of dark and deep-faked?
Absolutely. I do think that technology will keep rising to the challenge. I mean, to Val and Roland's points on, AI needs to be met with AI, or at least greater technology around financial crime, right? And that's where it's been interesting watching politicians, for example, suggesting legislation around AI, where it's, banning it or, trying to control what can come out of AI. And really the answer is more data scientists at our financial crimes institutions, right? At the US FinCEN, for example, having more folks trained in AI and catching it, I think, is the best way to address these financial crimes, at least from the, political perspective.
Thank you. Okay, well, that wraps up this week's Fintech Insider News. Thank you so much to today's fantastic guests. Where can people find out a little bit more about you? Valentina, where can people find out a little bit more about you and OakNorth?
Sure. So if you want to find out more about OakNorth, www.oaknorth.co.uk. And if you want to find out or connect with me, then I'm on LinkedIn, Valentina Kristensen.
And Rina?
You can find more about Wise at wise.com, and I have a LinkedIn, Rina Wulfing.
And Roland?
You'll be unsurprised to hear exactly the same. So if you want to learn about Yapily, yapily.com, or just Google open banking, we're on the first page, and the usual suspects of LinkedIn people can look up.
And as for me, Benjamin Ensor, I too am on LinkedIn, and you can find out about the work that the team is doing at 11fs.com. So thank you to all of you for listening. Please do join the conversation on social media or get in touch. Thank you all very much for listening. Thank you so much again to my guests, and goodbye.